Welcome back. You're still tuned in to Midcap Radar. It's time to focus on mass financial services. Companies' profit after tax and asset under management improved on a YOY basis. Asset quality came in a little bit weak. To understand more, let's welcome Kamlesh Gandhi, the Chairman and Managing Director at Mass Financial Services. Mr. Gandhi, I wanted to understand about the asset quality. The other parameters look good, but in absolute terms, gross NPA has increased on a quarter-on-quarter basis. Wanted to understand what's the outlook going forward in terms of gross NPA and net NPA. Is there any market or any segment where you're seeing some pressure? Can you hear me?
Good afternoon, sir, please.
Can you hear me? Mr. Gandhi, am I audible? Okay, we'll try connecting again, Mr. Gandhi. Looks like there is some technical issue that we are facing. But if you look at mass financial numbers, remember the targets for FY25 stood at 20 to 25% AUM growth, gross NPA between 2 to 2.5%, net NPA between 1.5 to 2%. This time around, the net interest income is up 31% on a YY basis. So decent numbers when we talk about the NII. The gross NPA absolute figure, however, did see an increase on a quarter-on-quarter basis, but of course that is something that we will connect with Mr. Gandhi in just a bit and get more details about. Meanwhile, if we look at the markets, the Nifty, it has picked up a little bit of pace, so that one is up around 67 points, and we have the Bank Nifty, which is up around 330 points. But overall, it's a lot about markets and stock-specific action. Let's get back to mass financial services. Mr. Gandhi, I wanted to ask you, what's the outlook on NPAs from here on? Gross NPA in absolute terms has increased on a quarter-on-quarter basis. Is there any segment where you're seeing pressure? What's the outlook on these two numbers, gross NPA and net NPA?
So good afternoon. So if you see the overall quality of assets, we have a range-bound NPAs, as we always projected, anywhere between 2.25 to 2.50%. And the segment in which to whom we cater to, this is well within our expected lines. And we continue to hold that the asset quality is quite strong, and going forward we'll be in a position to maintain the NPA levels at around 2.5%, below 2.5%, and net NPA in the range of around 1.5%. So overall, it was a good quarter for us in terms of asset quality also.
Mr. Gandhi, just give us a sense of how AUM growth panned. We understand that sequentially it was up around 2.5%, year on year up almost 24%. Going forward, what kind of run rate can you maintain over there? And also, what is the outlook for disbursements? If you could share your FY25 outlook.
So our stated objective since long, as I've shared number of times, is to grow anywhere between 20 to 25% on a yearly basis. And just to share with you, we are not the company who chase a quarter on quarter or a sequential quarter growth. But we are very confident of the fact that we will be in a position to meet our stated objective of growing anywhere between 20 to 25%, which we have done since more than 2 decades. We have maintained that trajectory of growth of 20 to 25%.
Okay, all right. So you talk about maintaining your guidance, but just trying and understanding some of the industry trends as well. One is that your NIM is up in this quarter, which is bucking the industry trend. You had raised around 500 crore rupees via QIP. Did that aid it? And in terms of rural markets, what is the recovery looking like there?
So in terms of our capital raise, I think it hardly had any impact this quarter, because we raised the QIP money in the latter part of the June. And by the time the money was available to us, it was already 25th or 26th June. So the improvement in NIM is the function of our slightly higher yields that we could recalibrate looking at the cost of funds. And in terms of the rural recovery, we are, as far as our segment is concerned, we have not seen much stress on the portfolio because of the rural lending. And that is mainly because of the fact that we have been extending credit where it is due, being prudent in terms of our lending practices since long. So for us, rural portfolio has remained more or less stable.
Mr. Gandhi, could you give us a trajectory for the NIMs going forward? And also, incrementally, what will be the cost of funds versus the average cost of funds you've enjoyed historically?
See, come again on
the margin guidance, the NIM guidance, and what will be the incremental cost of funds?
Mm-hmm. So in terms of NIMs, we have always maintained that we'll be in the trajectory of 6.75 to 7.25% on NIMs. And that is what we intend to maintain, and that we have maintained over a period of time. And in terms of our cost of funds, I think hopefully say after Q2, we might see a reduction anywhere between 0.10 to 0.15, 0.10 to 0.15 basis point in reduction. Because on account of two counts, we might expect some easing of rates in the economy. And number second is we have been recently upgraded to AA minus from our A plus category. So both combined should hopefully reduce our cost of borrowing in next few quarters.
Okay, all right. Mr. Gandhi, it was a pleasure speaking with you. Thank you so much for joining us today and giving us all those details. That's the word coming in from Mass Financial Services. They maintain their guidance and they say that the outlook continues to remain very positive. We'll slip into a short break. When we come back, we'll talk about more in detail about markets and a lot of stock-specific action that's happening in the broader market. Stay tuned.